we probably would be thinking more of getting out of this position even earlier before we are being hit. Where? Well, as the price develops some kind of structure and there is an element of a time stop loss. Within a certain period of time, my position is still unprofitable and it doesn't work. So this is 2.5 months. Would you be getting out of this position or not? So you could have the exit just based on the time stop loss and time characteristics. That's number one. Secondly, we could get out and we could just have a loss. And this loss would be only, let's say, half of our position size. Why? Well, because we only have 2 entries. And we usually would scale in 4 segments, right? So even if it's a loss, it's only 1/2 of the position size. Of course, there is a third decision here. If we're recognizing that this day had a very unusual characteristic of increasing downward spread on extreme volume signature. And if we analyze this bar and we're going to say that this is a potential spring, then we might keep this position on, even with the bar that comes next right here, because supply is diminishing, result is diminishing as well, and then we have a higher low test. So that could be a solution number 3, but you have to be an extremely comfortable with your analysis and with the bias that you are giving this stock. So my preference is probably going to be something like this. If I got in, let's say right here and then here, at some point, I'm going to say my stop loss is going to be somewhere here, and partially I'm going to get out of this position. So close, let's say 1/4. And then it still will be exposed, but not as much. And then hopefully I will go through this. And then obviously, even if I take a loss, my points of entry, just based on what we just went through, are going to be here, 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 this bar, and then we go into this bar, this bar, this bar, this bar, and so on and so forth. So again, look at how we are accumulating this position. By the way, we've done so many campaign exercises at the Wyckoff Practicum course, and I'm showing you exactly the reasons of where we would be getting in, why we would be getting in here, and so on and so forth. So this would be the sequence of entries, possible entries. And every time we enter, we want to enter on the point of no return. What does it mean? This is where the price does not come back to this level. Maybe it just came back somewhere here, but everything else is just, the price does not return. And that's just an element of the risk control just based on how the structure develops and where you enter itself. All right, guys, let's go away from this. And let's just see how much we're gonna do. So I'm thinking that maybe we'll stay until 6 today. We'll see. All right, a volunteer, and you have to actually first. Which bar did we stop at? I think that we've revealed this whole chart, right? Is that what we did? So you have to remind me. Have we discussed 52 to 58? Okay, so I don't quite understand, guys. Have we discussed 52 and 58? Yes? Okay, so we've discussed that. Have we really? I think with Adam we have stopped somewhere here on 52, right? Yeah, I think that we've discussed all of this and then we've stopped. So let me discuss this, but I know that I've revealed this right here. So let me discuss 52 to 58, and then I want to have a volunteer so that we would start the next segment. So let's look at really quickly at 50 and 51. We said that after this secondary test, which was somewhat successful, look at the levels of the supply here and look at where the price is rebounding relative to the height of the range. We're kind of rebounding off the 1/2 of that range, of that height of that range. So that suggested that we're going to have an upthrust. An upthrust is usually an element in phase B. So there was a built-in trade right here that would get us above 42, and then at the first signs of the deterioration, we're going to be looking to sell if this is a very short swing trade. And we see those signs of deterioration in the diminishing spread signature of the 46, in the supply tail, in the increased effort that doesn't produce the same result as 45. So therefore, right here somewhere we will be getting out. After that, 47 develops a change of character. This is a small trading range. On the intraday basis, we just don't see it on the daily. But this is the first bar since the low of 44 that suggests that we are done. This is a confirmation. And we go into the reaction and look at the reaction that we have. The supply increases, and we were talking about first emergence of the supply, how change is gradual. And think about this statement, why change is gradual in the markets. Sometimes it's very violent, right? And everything changes very quick. Like the market that we had in December, January. We were in such a bearish sentiment, and then quickly that sentiment changes. But even with that quickness, we still had a week or two where we could have guessed that the change is taking place, and we could have seen the signs of the demand coming in into the market. Well, here this is the opposite. A change comes gradually at point number 45 because we see that the volume signature has increased. So what does it mean? It has some suggestion that supply has come here. Yet the result is still favorable, so that supply is small and does not produce a lot of the result to the downside. Then at 46, that supply has increased. How do we know this? Well, the volume signature has increased by itself. That's number one. So supply has increased. And at the same time, the result to the upside has diminished. So this means that on the more supply, we're producing more of the stopping action and more reaction within the context of this bullish upswing from 44 to 46. So we see how from 45 to 46 supply increases. Then at 48, we're seeing that the volume goes down. And that suggests that demand by itself is deteriorating. And we see how even if supply is going down as well, we see that the close is lower than at 46, that the tail at 48 to the downside, the supply tail, is more than at 46. So that gives us an understanding that on diminishing supply, we're producing a better result to the downside. So there is some kind of ease of movement built into that bar. And obviously, looking at the intentions, intention behind 45 was to overcome the high of 42. We did that. Intention of 46 was to overcome the high of 45. We did that. and we committed at the close above. Intention behind 48 was to overcome the resistance at 46 and commit above it, and yet we don't do that. Instead, we are closing below the close of 46. So that shows us the timing of when the price is ready to go down, because the effort and the result at this point are somewhat synced. And in the practicum, I'm going to show you, and we're going to have a couple of exercises on synchronicity between the effort and the result. And that defines the beginning of the reaction. As the reaction starts, we see that supply is present, and then on the next bar, we see that supply is present, but demand is coming in. Volume increases, and yet the result is better than the previous bar. What does it mean? That means that demand is there. Demand is present. And we see that also from the tail, from close to close. Look at this close relative to 49 close, and look at 49 and 50. They're almost at the same level. So demand is definitely there. And if demand is there, the first thing is just to stop the price from moving further down. And this means that absorption was happening on the way down. And now we're going to go into some kind of testing. In the testing, supply is going to locally increase at the level of the support. And we see those testing attempts. Number 1, number 2, number 3, number 4, number 5, number 6. Quite a lot of tests here. And the last 2 bars, I have in the price characteristic of a feather. And I'm sure that on the intraday you could see this. So we're coming into the short-term resistance right here, and look how the supply and demand signature are diminishing on the reaction. There is some kind of grinding out action into the resistance. So we know that after the feather, what are we going to have? We're going to have some kind of momentum move, and that goes into 52. Now right away, I'm thinking here that 52 is probably going to be analogous to 45 and 46 if I combine these 2 bars together. So look at that. Does that look the same or almost the same? Doesn't that have the same intention of overcoming the resistance at 46 and moving further up? Yeah, so let's compare those. So we're going to compare 52 and 45 and 46. And here, obviously, right away, a question is going to be, should we compare the volume signature cumulatively? Or should we compare it just, on absolute basis? And we could do both. In this case, I mean, obviously, we know that cumulatively there's going to be more effort right here to push the price up, less effort here. But I would use probably just an absolute value. That just tells me that the increase in the volume signature, which is one of the highest increases since the sell-in climax itself, is most likely carrying a lot of supply. So there is some supply increase. So I know that there's going to be a gradual change that's going to come, that's possibly going to come at some point. Where is the confirmation of this idea? Well, the first confirmation is just in the bar number 52 itself. Even though it looks bullish, and this is where amateurs are going to make a mistake. And this is the whole game for institutions. Amateurs are getting excited. Weak hands are getting excited at 52. It looks bullish. By the conventional technical analysis, look at the volume signature. Does the volume confirms the price action? Yes. The volume goes up, the price goes up. Volume confirms the price. So, but a little bit erroneous statement in this class, because the volume needs to confirm not necessarily just how bullish the bar is. It needs also to confirm a commitment for this bar. What was the commitment? The intention was the commitment above 46, the high of 46. Do we do that? No. So we're seeing an increase in supply that stops the 52 bar from committing above the resistance. Bullish or bearish? Probably bearish. Just because supply emerges and it has the capacity to stop the price from going further up. So that's the first sign of supply emergence in this area. Then the next confirmation is going to be at 53. So 53, look at the level of the supply. The level of the supply is increasing, and then we are producing a relatively big supply bar to the low, and I would be thinking that this acts, if 52 acts as a buying climax, 53 acts as a change of character, an automatic reaction. Kind of reminds me of 46 as a buying climax and then 47 as an automatic reaction. So again, we are comparing these bars of these two areas using the analogs. And we're seeing that the 53 change of character, a change of character at 53 is more bearish than the change of character at 47. Multiple conclusions can come up out of this. We have not overcome the resistance at 46, 48. We stopped. Then we tried to overcome, we gapped up on 53 and then instantly went down. And that change of character is so much more than at 47. So what kind of deductions could we have here? Even at that point, we could say that there is more, it's more bearish because there is more supply and there is more result to the downside. So we know that if we had a reaction from 46 to 50, most likely the next reaction that we're going to have is not just going to be to this level. It's probably going to extend. And where would it extend to? Well, what are our targets? So the low of 44, the low of 40 and 41. So this is our target zone. And here with the target zone, we would be thinking that if this is an overbought condition for this target, then this is going to be an oversold condition. And we would be thinking that this is a good trade for us, so we would be looking for an opportunity to open the position here. Now, there is something wrong about bar number 53 if we're thinking establishing the position right away. What is wrong? Well, we see that on a short-term basis, we have a tail that is a demand tail. So this demand tail suggests that short-term, we're going to have some kind of attempt to rally at this point. Plus, think about the momentum on 52. We still have not deteriorated that momentum yet. So that confirms that on a short-term basis, the rally might happen. So we just need to see. And if the rally is going to develop, we're probably looking at the trading range like we had at 46, 48. So next bar, 54, is a very interesting bar because this is an analogous bar to 52. Look at the effort at 54 in comparison to 52. It's the same. Yet, what could we say about the result of 52 relative to the result at, I'm sorry, 54 relative to the result at 52? Well, we see that the up spread is definitely diminishing. We see that the close to spread is deteriorating as well. We are seeing a tail here on this bar where we didn't have any tails at the top of the spread at 52. So that suggests some kind of supply or deterioration of the demand, and with the volume signature, most likely increase of the supply. So we're even thinking that there is more supply at 54 than at 52, just because of how result is being shown to us. We also look at the close to close, and we are seeing that definitely in the case of 52, there is more progression from close to close. So again, deterioration. And then the intention was obviously the same as the bar number 46, the same as the bar number 45, the same as the bar number 52, the same as the bar number 53. The intent is to commit above the level of the resistance, and we still cannot do this. And now commitment line is slightly higher even. But even if we use 46 as a commitment line, we're closing below it. So therefore, no, intention was not fulfilled. So all of this is extremely bearish, and the result of bar number 54 is deteriorating after bar number 52. So now we know that most likely we're going to have some kind of reaction. There is still some momentum on bar number 54. We might assume that, we are in the trading range at this point. We would be looking at the phase analysis and so on and so forth. And then bar 55 comes. So if we said that 54 is more bearish than 52, then 55 is much more bearish than any of these two bars. Why? Well, because the effort is almost the same or just slightly below. Just slightly below or equals the previous efforts here. And yet the result is so much smaller. We don't have the same type of spread. It's very condensed, diminished. We are not closing above the high of the 54 bar. And that suggests that the intention was not fulfilled. And that's bearish by itself. So this 55 is a much more bearish bar than 52 and 53. And therefore, again, change happens gradually. And the reason why it happens gradually is because there is no way that the CO or professionals could unload their positions instantly. If they do, they're going to influence the price in such a way that we're going to see more of this type of movement out of this place. Here at the top, they're trying to sell in such a way that would not move the price significantly down before they get rid of the stock. And then what comes next? 56 has a deteriorating supply signature. And that's again going to be something confusing to a lot of amateur traders. Why? Well, because first of all, they're not going to see supply at 52. They're going to miss increased supply at 54. They're going to miss supply at 55. And then when the down bar happens and they see that, okay, well, maybe there is a deterioration, decrease in supply, and it's still within the context of the uptrend, very close to this long-term support. So, I should get in here, or I should add. And obviously they will be mistaken, because we know that all of this, up bars, contain supply signature in the volume signature. So therefore, what is 56 then? Because now that we're thinking what has happened, we're seeing supply, 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 and then lower supply. And yet what happens? We are actually committing at the close of the 56 below the level of the bar of 55, which was the last attempt to commit to the upside. So we have not experienced this yet, right? Look at this bar right here, 52. Do we have a close below? No. Look at this bar, 53. Do we have a close below? No. 54? No. 55. So I'm only going through the bars that had some supply signature in it. Yes, for the first time we have that. But it happens on the diminishing supply signature. And yet intention has been satisfied and fulfilled, and therefore this looks like a timing tool for us to consider that this is when the move is going to start. And by itself, with this commitment to the downside on diminishing supply signature, this bar is an ease of movement bar. And that's how we would view it. Could we open the position here? Yes, absolutely. We would be thinking about opening the position here. And then we would be thinking we're probably waiting for some kind of LPSY backing up type of action, and also production maybe of a more manageable major sign of weakness, which comes at 57, especially on the intraday level. You will have to look at this as a more as a trading range right here from 52 to 58. So if 57 is a sign of weakness, then 58 is a LPSY, last point of supply. So there are quite a few places here that we would open the position, or we can open the position. First bar at 57, still somewhat vibrant, but still, look at the levels of the supply. It's still there. So all of those bars is just basically selling. And the first bar is active, aggressive to the upside. So we should be expecting some kind of retest. So retest is coming like this. And this would be our last point of supply. So we could open the position there, somewhere here. And then as we break out to the downside, this level is also could be considered for opening the position. So 3 places that we could do this. Obviously, we could also do this on bar number 55. And the reason why we could do this is because within the longer term structure, and some of you who sent me the homeworks, you guys did a really good job because you were thinking that this is our trading range right here. It's just up sloping. And then this is phase A, test in B, test in B, C. And therefore, we could have a trade here. Okay, I don't mind that, and I don't mind that trade at all. This is a good trade. I just want us to understand this. How does it happen? How do we compare on the analog basis, what is happening in the second area compared to the first area, on the swing 18 compared to swing 16. All right, so if we're in this position, how would we handle it? How would we manage it? Well, let's assume that we're fully invested already in this position. 58 bar is really good for us because it still shows that supply is increasing on the way down, so we're feeling really well. And there is a suggestion to add right here, which we would. And then look at how the price moves to the downside, the characteristics. Diminishing supply signature, and as we come close to our target zone, we are starting to experience some kind of buying as the oversold zone acts more as a value zone right here. So there is some buying around 59.60, and then the price continues to the downside and comes below into the oversold condition, below 40 and 41 on increased volume signature. So right away here we would be thinking, what are we doing here? Are we experiencing a distribution, a continuation of the distribution that we have had, or could we possibly be thinking about the trading range and maybe more of the accumulation type of action? So with that, guys, I want to see who would like to volunteer to go through the next segment with me. So just say yes, and hopefully somebody who has not done this before. And we'll go for maybe 20-25 minutes after this. I'm waiting, still waiting, still nobody is saying yes. Now I'm curious about why nobody is saying yes. What are your thoughts inside of your head? Why are you not stepping in? This is an excellent opportunity to advance your knowledge. Yes, it's uncomfortable. I get this. You don't want to do this. I get this. But that's the only way. All right, let's go to Doug. Some motivational speech for you. Hey, Doug.
Hey, how you doing?
Good. I can't hear you really well. Could you be closer to the microphone, please?
Sure. How's that?
Much better, Doug. All right, so I stopped the analysis at around 61, and I said that there are probably a couple of scenarios where either looking at the distribution, and this is just a first move or like a second big move to the downside, and the second scenario, maybe we're in the trading range and we need to define the bias of this trading range. Let me ask you a more general question. How would you approach this puzzle? How would you approach this problem? What are the first things answering those questions? And basically the question is, are you bullish or are you bearish at this point? How would you think about it? Like, I want to understand the logic at this spot so that we would either say, yes, this is good, or we would adjust this logic. So what are you thinking?
Well, at point 61, although it is a bullish bar and it's finishing near the top on its close, it's still, in terms of the recent activity, it hasn't really accomplished very much yet. There is some demand. I guess the other factor that I'd look at is there is a fairly big
Doug, I lost you.
Sorry, I hit the button. Yeah, so they're on 61, the extenuating factor is there's a pretty big demand tail coming in on 61. But again, its close is really not really moving too far up, and the two previous bearish bars, it hasn't really accomplished a whole lot there.
Okay, so therefore the bias
The bias to me is still bearish.
still bearish. Okay, so let me ask you another question. It kind of like a continuation question. For the bearish bias, what do we have to see from the price and the volume signature as well to confirm this assumption? So what would be kind of like the next, how would the price structure unfold next if this is a bearish scenario?
Well, there is, that bar at 61 has one of the highest volume signatures, which indicates there's still a fair amount of supply that is present.
Okay, but I'm asking you, if you're thinking about the bearish bias, how would the structure develop after this? Would it go down right away? Would it consolidate? What should happen here and why?
Okay, my just looking at it, although that bar at 61 again has, as I said, some uh, demand tail, it's the level of activity which makes me think as it goes forward, yes, there will be a reaction, but how strong that reaction will be, it doesn't look like it would be very strong. So
You mean after 62?
up to 62, sort of that swing, what is that, swing 20 we're calling it.
Oh, okay. So the reaction to the upside. Okay.
Right.
Okay.
So
So,
there is likely, because there has been some stopping action by bar 61,
mhm.
but it's with the large volume signature, it makes a little bit questionable of how far that any reverse rally is going to rise.
Speculate. I'm trying to extract this information from you. Speculate as to what's going to happen after 62.
I'm speculating that it is going to resume its downward trend.
Okay, great. So, and that's kind of like what I wanted to hear. So, therefore, if this is the case, if the price is going to continue to the downside from 62 and just going to go down, then how would we label 61 in the relationship to the 40, 42, 44, 55? Could we label this whole thing?
You could label it, I guess, as a spring.
Hold on a second. Are we talking about the bullish scenario or a bearish scenario? Because you said that you would be looking.
Yeah, I guess, or a sign of weakness, I guess, would be probably more appropriate in a distribution
Okay,
scenario.
let's review really quickly. So if we're talking about a distribution, and in this case, the original distribution is right here at the top,
Right.
then this is going to be considered by us as a redistribution. So redistribution is going to look like this.
Right.
Sell-in climax, which is going to be intermediate sell-in climax, not terminal, not final.
Hmm.
Secondary test, phase A, phase B, upthrust into phase C, major sign of weakness, LPSY, and then a continuation to the downside. I want you to label this whole range.
Okay, so the way I was sort of looking at it is 61 is your sign of weakness. Uh, 62 would be the LPSY.
Okay? I want
Uh,
everything.
you and we're going back through there, then up. We're looking at 55. Then would be the upthrust.
Okay?
Um,
Phase.
that would be a phase C.
Mm-hmm.
Yeah. And then you have prior to that your secondary tests, which would,
Um,
or,
do phase A first.
oh, okay.
So 40
Um, yeah, so that would be your sales climax
selling
coming up
climax. Uh-huh.
40, 42 would be your automatic reaction.
Mm-hmm.
And yeah, and then I was going to say that you have your secondary test, which would end your phase A,
Okay. So see
and
how
then
simple
the
this is,
rest.
Doug, right? So phase C, define phase C, define phase A. Everything is between is B. You don't have to think about what's in B here unless I'm asking you here, like identify 46, 48. So just a small shortcut for you. Okay,
Mm-hmm.
so yeah, it looks like it, right? So here is a schematic. Here is how it looks. Now, let's talk about characteristics, right? So I want to extract from you the information on the major sign of weakness and LPSY. Okay, so major sign of weakness, obviously in phase D, are going to have what type of the characteristics?
It's going to have broken the support.
Okay, so but in
That
which
was a step.
way? In which way? Because we could break support with the spring as well. And our conversation here is going to be more about this major sign of weakness or as spring, right? So something like this. So what we in both cases we will go below the support level. So I want to establish the level of commitment, price commitment that major sign of weakness will have in comparison to a spring.
Yeah, just looking at this chart, I mean, one of the characteristics on the spring would be that it does, which is happening here, is it doesn't last very long below the support, and there is a change of character
Okay. So
into the
you kind
upwards.
of jump in forward. I understand your logic there, but I want us to stay on this thought for now because that might, I see that you understand this, but I want others also to understand as well. So major sign of weakness is going to commit down in which way in comparison to the spring? You said that commitment of the spring is going to be, let's just call it
Oh,
temporary.
yeah, I guess perhaps what you're saying there is that you have the commitment is to the downside,
Mhm.
to the close. Would that be
Yes, by the commitment, we are looking at the close.
right?
And we usually would like to see that commitment, right? So let's talk about the commitment. That's okay if we're reviewing this, guys, because we need to. Okay, so commitment. How would we measure the commitment? This is a temporary commitment when the price just commits with one close. This is going to have a progressive commitment to the downside where we have multiple closes that are below the levels of short-term commitment between the bars here. So 3 closes. So this is more of the temporary commitment. And this is, and then another one, a bar like this. So imagine a bar like this. This is more of the attempt to commit. So it tries to commit on the intraday level. We see this from the tail of the bar, but it
Mhm.
doesn't close below the support. Next bar, more permanent, more kind of like more significant commitment. At least one close below, but then it goes up. More permanent commitment where we have multiple closes. And not only that, the closes to the downside are showing some progression as they close lower and lower and lower. So this is just on the commitment itself. But let's come back to the major sign of weakness. So you said that with this spring, we are going to have somewhat of a temporary commitment. Maybe one close, maybe this is an attempt to commit to the downside. Now, what kind of commitment to the downside would we have with the major sign of weakness?
Well, it's a longer duration.
Okay, so stays
It stays below the level of support for a
below
longer duration.
support longer. And this usually is going to mean that you might have multiple closes.
Right. Which I guess in this case you have three as it looks.
Well,
Three,
again,
maybe four.
we're only talking about the progression of the commitment. If we have any up bars in between these 3 closes here on the commitment, we're still going to count 1, 2, and 3. Why? Because those are the most important bars for us below the support. Are we staying below the support? And are we progressing lower below the support? So
Mhm.
let's say multiple closes, but the idea that you said that staying below the support longer is the correct one. Because if we're going to have multiple closes below that would suggest that we're staying below that price, that support level. Okay, so what other characteristics? Don't think about this right now. Don't compare this. Don't think about the screen. Don't think about the major sign of weakness. Let me teach you. What is the next characteristic that we would be looking at on the major sign of weakness that would tell us that, yeah, this is a major sign of weakness and not necessarily a sprint. And I'm going to give you a hint here. I want you to look at the characteristics of the move to the downside from 55 to 61. What would be the characteristic of a major sign of weakness as the price moves down?
Would it be accelerating to the downside? But I guess that applies also to a spring. So.
But there might be a slight distinction there. Look at 37 to about 39, right? So this is a sign of weakness. You could use this as an analog here in your comparison. So what does the spread do?
Okay, so the spread is it is increasing.
Yes, increasing relative to what we've seen, let's say 33 to 35.
Right, which is happening in this particular case also.
Okay, where exactly? What are you comparing it to? So let's look first. Hold on, don't rush. This is very valuable. What spread are you looking at? Downward spread from 55 to 61. If you would average all of the downward spreads in this area, what do you think the size of the downward spread would be?
It looks like it would be around the size of the major sign of weakness bar.
Like this one right here?
Yeah.
Yeah, probably will be something like this, right?
Right.
Would you say?
Right.
To the
Right.
downside. So this would be an average down bar.
Mm-hmm.
Okay, so is that threatening?
Is that threatening? Is that
Yeah.
what you're saying?
Is that as threatening as the downward bars from 37 to 40?
No.
Is it the same size as 43, 49, and 53?
No.
Okay, so then what other characteristics do we need for the major sign of weakness here to show us that indeed this is a major sign of weakness? We said it's in the spread, but also it should be in the volume signature, right? So we see
Right.
how the volume starts to increase here. And this is slightly different. This is more, comes as an ease of movement. And even if we said ease of movement here at 56, look how different this is of movement in the distribution formation here from 33 to 37.
It's definitely a larger, a lot more volatility and a larger spread in those bars there.
Yeah, if we would compare two swings, we would compare a swing from 37 to 40 with the swing from 55 to 61. Which one is more bearish and which one is more bullish? Or let me rephrase this.
Well,
Which one is more bearish and which one is less bearish?
well, definitely the 37 to 40, what is that, 41, is more bearish.
Yeah, so we want basically to see the volume increase on the major sign of weakness. Why? Because we want to see selling, increase in
Right.
selling. Do we see a substantial increase in selling in this area? So look at, let's say, 58
Yeah.
as the bar that does have some selling.
Mm-hmm.
Which bar else here do you see a substantial selling? I'm going to be extremely detailed here because I want you guys to get this, and Doc, I want you to see this as well. 56, does it has a lot of selling?
No, it doesn't.
Okay. First downward bar after 57, this one right here, does it has a lot of selling?
No, it's small again.
Okay, so 58 we discussed, yes, there is some
Right.
selling.
Mm.
Okay, and then next bar to that.
Yeah, same thing. It's relatively small,
What's
but
the
it is
intention
increasing.
behind this bar?
Uh, The intention would be to go beyond bar 58, which it did.
Well, here
It's to the downside.
we see that there is an attempt to rally here. So in reality, this volume signature is showing us an increase in the demand. And the demand comes because of this bar right here. This is where they bought in before. So someone's thinking, I'm going to do the same. I'm going to buy at this level because this is an area of the support, and then the price is going to go up. They're lucky for like a moment there that the price goes up, and then it's being sold into them again. So we can't really say that this is a lot of selling. Some buying is behind that as well. Okay, what about the next 3 bars or the next 4, down bars?
Yeah, the volume is down. I was looking at it from that intermediate bar 2 after 58 is there's an increase in volume happening up to
Okay,
61, but
don't go away from me. Don't go away from me. Just
okay,
stay
so
with me. Stay with me.
yeah,
So, because there are so many details, if we're gonna just side note, we're gonna lose the logic here. So, looking at this volume signature, is there a lot of selling on the way down as we go down? Probably not.
not yeah,
Probably not. Then we go into the 50, 59 to 60 area. There are attempts to rally. So some demand starts to
right,
occur here. So here's a function of the demand. And we're still failing, but are we failing on the increased supply that's coming in?
not at this point.
Demand is increasing and the volume signature locally increased, but it's not as much as what selling we have had before. So selling is going down. So we kind of see through the progression of this reaction that the selling is actually going down. So now let's combine everything. And again, just kind of stay with me. We've said that we need to see what's going to happen with the commitment below the support. We see only one close below, and then the price recovers. And recovers relatively quick, right? Then we said that a major sign of weakness is going to have the characteristics where the volume is increasing and therefore supply is increasing on the way down. Plus, the down spread is showing some kind of also element of the increase of the result to the downside. Do we have?
Yeah, we don't have that.
We don't have that. Okay. So if we don't have that, then it's probably not a sign of weakness, at least for now. At least we need to confirm this. Then probably we're thinking that this could be a potential spring. Okay, so now again, we're not done. So guys, don't think that we've defined this. Doug, let's talk about the spring. What kind of structure this spring would have around the support? So we are committing to the downside, and then what should happen after the spring?
It should, as the name implies, it should spring. There should be a reverse to
Okay.
the upside.
Okay, so we have that. So that's the first confirmation. The price temporarily commits below the support, has some kind of demand signature on both of the bars,
Right.
and the price comes back into the trading range. So we are confirming a couple of things here. Number one, short commitment, temporary commitment to the downside. Number two, emergence of demand. Number three, coming back into the trading range
Trading
above the
range.
support. Number four, what should happen after that comeback?
It should test.
Test. So we are waiting for a test to happen. If test happens, this is going to be another confirmation that this was a spring. What is the next one?
After that,
Yes.
then it should rise through the trading range.
Yes. So
to some sort of sign of strength.
This commitment below this local resistance that is being created between the low of the spring and below of the test, this high right here, I'm going to give a name to that because this is such an important localized high right here. If we have a local breakout of that, it's going to act as a confirmation, final confirmation that this was a spring.
Mm-hmm.
Let's kind of like stay in this space a little bit. Let's observe all of this. Okay, so we're thinking that does not look like a major sign of weakness. We might still be mistaken. If this is a spring, give us the test. Test number 1 is there, temporary commitment. Test number 2 is there, demand is present, and there is absorption on the way down there. The test number 3, the price comes back above the support level and comes back into the trading range. We still don't have test number 4, which is the test itself, and we don't have the test number 5, which is the local breakout above the resistance level, which probably will be somewhere here.
Mm-hmm.
So this is what we're looking at. If we have this, the breakout, this is going to confirm the bias to the upside, at least, a short-term bias. By the way, really quick question, Doug. If this confirms, actually 2 questions. If the breakout confirms that this was a spring, where is the target for that trade? That's number 1.
The target for the trade would be up at 50, well, in the area 46, 48, 53. Yeah.
Okay, great. So this is our target number 1. If this is a spring, then what is the rally? How would we label the rally?
How would you label the rally?
Think about spring, phase C.
Oh, you'd be phase D, yes.
Phase D.
Yeah.
And this rally would be labeled as?
Major sign of strength or possible major sign of strength.
Major sign of strength. Because
right.
If we're in phase C on a spring, then the next thing what's going to happen is phase D and a major sign of strength. So our target is not necessarily just on the boundaries of the resistance here of 46, 48, 53, 55. Because what is the definition of the major sign of strength?
That it goes above the trading range, closes above the trading range.
Closes above the trading range boundaries.
It didn't make a commitment above resistance. It makes a commitment above resistance.
Exactly.
Excuse me.
Right, exactly. So the major sign of strength, in comparison to all of the upthrust that we had before, would travel through the trading range, starting with, at the lows of phase C, would commit above the area of above the resistance cluster that was created in phases A and B, and then would come back into the area of that resistance now that is going to act as a support. So we have a target number 2 as well, somewhere here. So 2 targets. So that was the question number 1. Secondly, if that were to unfold, where would we open a position?
You'd be opening a position after 60. Oh, after that test.
After the test.
The first test.
Where
right.
else? Okay, so number 1.
Right. Well, up at the backing up action that will hopefully occur.
You mean right here?
Yes.
Okay, but before that, are there any other places?
I guess perhaps after it passes the level of 62, you might enter.
Absolutely. This breakout acts as a confirmation, as we said, right?
Right.
And this confirmation equals just a point of entry for us. Why wouldn't we get busy here with this trade at this point? Because if we're thinking that target 1 and target 2 are so far away, it's a really good swing trade. even if we are wrong and this is not the major sign of strength, and it's going to become an upthrust like we've experienced before, it's still a really good trade because we have a lot of distance here. This was a very quick trade. We probably might not even consider this. This trade was not was quick, and also we might not consider it because within the contextual structure of where we are, phase B, we're not necessarily that, happy about this. But this was a good trade, and then this could be a good trade. So these are the two swing trades within the context of the structure. And then when we are in this position, and if the major sign of strength characteristics are going to unfold, like what we've done with the major sign of weakness comparison to the spring with dog, we're going to do the same process when we're going to look at that rally, and we're going to say, are there characteristics of a major sign of strength as the price moves up? Are there definitional characteristics of the major sign of strength as the price approaches the resistance? Is there any supply that is starting to emerge in this place? And if it does, what's the rate of absorption for that supply in this higher level? And then we'll go through the same process that we've done at 61 with the major sign of weakness in the spring. So therefore, on the way up, we do have quite a few opportunities to establish this position. The test itself could be our first point of entry. The breakout above 62 could be a second point of entry. Any type of significant bars to the upside as a sign of strength bar could be also another point of entry. So we could potentially have maybe like 2-3 points of entry here. That's number one. We definitely want to slow down as we're approaching the resistance because we don't know if supply is going to come or not. We'd rather wait, as Doc has said, for the backing up action or a confirmation of that. So that's going to be kind of like our strategy. Okay. Well,
Is there, between 61 and 62, what sort of threw me off is the declining volume signature. And that's what made me think that it was not a spring.
Yeah. Okay, well, let's definitely address this, and then we have one more point I want to show you guys, where we are with that, and that's going to be your homework. We definitely going to go much faster next time. Doc, don't think that this is you. Everything that you and I have done is fantastic.
That's great. Thank you very much.
Yeah, because you brought up correct thoughts, and we adjust, correct in a way of your thoughts produced correct questions. And it was great how we went through all of this because the logic was presented, so we could be mistaken, guys, and it's not a huge mistake to be mistaken in our analysis. It's a huge mistake not to analyze it and then not to adjust ourselves in the logic. So, and that's exactly what we've done here. But let's come back to the question that Doc is asking. The volume signature is diminishing. So therefore, what is happening with the supply, Doc?
The supply is diminishing.
What is happening with the demand?
The demand would either be the same or is diminishing somewhat. Actually, it'd have to be increasing a little bit, otherwise it wouldn't go up.
Okay, so and this is where our analytical issue is lying, right? So could we have this situation? Could price go up on diminishing demand?
Yes, if supply is exhausted.
Yeah, if supply is poor or exhausted. Is supply poor or exhausted or diminishing here?
Yeah, it's diminishing,
It's
right?
diminishing.
It's poor.
Demand
right.
is diminishing too. But yet, what is the price doing?
Price is going up. This is what we discussed last week, I guess. So.
Yes. Remember that chart with Home Depot? Remember the
Right.
ice cream story?
Yes. Great
Yeah.
story.
So ice cream story is all about diminishing supply, diminishing
Mm.
demand, and yet the
Hmm.
price is going up. So
Right.
kind of the same here, but there are two concepts here. So the ice cream concept is all in how the price goes up and how the volume with the supply and the demand are going down. But the one that precedes it, and we didn't go through this a lot, was bar number 61 and bar before that. On these two bars, we see that the volume has emerged, and it's only temporarily that the price went down. So the question here is, how could the volume signature increase so much? How could supply increase so much, and yet only one temporary commitment to the downside, and then the next bar, it tries to come back. So we know that with this increased volume signature, we're probably thinking about the increase of the demand. So therefore, we're thinking about absorption on the way down that is
Hmm.
happening.
Mm. Wow.
So,
Great example.
so then we are observing the supply on the way down, and then supply is exhausted, it's diminishing, and demand is diminishing only because it has come here. It's enough,
Right.
it's sufficient. There is no more need for additional demand, at least at this point. Unless supply emerges, and then demand might come back and emerge again. You know, if the CEO is thinking that this is a good value for me here and this is a good selection. Um,
And at 62, that doesn't happen, does it? The supply doesn't increase uh, tremendously. So.
no, there is nothing. So if we would be considering this as a test, we probably would say it's a successful test. The test
Hmm.
is happening above the support. The test is happening as a high, low. We obviously need to reverse that. Um, we had, a short-term high right here, and supply is one of the lowest supply signatures on this chart, and one of the lowest signatures since the selling climax. So it looks like a good test at this point, at least for now. So, Doug, that's the main point for you, just on a kind of like personal level, right? And personal, I mean like for you on an individual level. Uh, the price might advance when demand is diminishing, and that would be the function of exhausted supply.
Hmm.
And we definitely want to combine that concept with the absorption on the way down that we see from this volume signature right here. Then also add the layer of the structural analysis, characteristics of the major sign of weakness in comparison to a spring. And that kind of brings me, I'm going to make a note. I'm going to make a slide for maybe next cycle where major sign of weakness is compared to a spring, and then upthrust is compared to a sign of strength. And I think that could be, a better explanation. What else, Doug?
So it's all contextual, isn't it?
It is. Yeah, of
Yeah.
course. Yeah, that the context is always going to be a layer for us. So we're going to
Right.
have the layer of interpretation of the bars, volume bars, and price bars. We're going to have the layer of the context in terms of labeling. We're going to also have the context of swing analysis, like we did from 55 to 61 compared to 37 to 41. There's going to be also the layer of uh, characteristics of the specific Wyckoff events. So the comparison, right? So how it should look like. And that's why I'm saying to you guys that all of the material that we've learned, from the first months, you gotta review, you gotta go back there, you gotta pull out from your library of slides, that slide on major sign of weakness and a spring. What are the differences? How do I actually, interpret it here, and so on and so forth. Okay, great. Um, Doug, one more thing here. Let's see what happens next. Okay, so here we're gonna start next time with this slide, but what I want to talk to you quickly here is actually, let me just pose this as a question for the homework. And obviously the homework, guys, is just to watch this segment again of the exercise segment. Rewatch it and make notes, send those to me. But the question, the homework question, is going to be this. Bar number, I'm extremely interested in bar number 64 and 65. Those are the breakout bars. Are we entering the position on these bars or not? So let's make this a homework. And this is where we're going to stop today. Would you be entering this on these two bars, on the breakout bars? Because our strategy was a sprint, a test, and we are buying here on the breakout. So the question is, would we be buyers on bar number 64 and bar number 65? Doug, again, that was a really good job. And I commend you for stepping in and being in that maybe uncomfortable zone, but going through this and learning and staying with the logic of it and kind of like finishing this. So really good job.
Thanks a lot. That was great.
Okay. All right, guys, this is it for today. Don't forget the homework. Definitely we're going to continue next in the next class. I think we're going to have less of the theoretical material in the next class. I want to finish this exercise. If you can believe, I have 30 more slides on this, 30 plus slides on this. So at some point, we're going to go really fast. A question here from Nilesh. Could you please upload power slides for this exercise? So usually we provide you guys with what? With the PDF? Is there a difference for you, Nilesh, between PDF and the power slide? I could definitely do that. You mean the homework power slides? Okay, yeah, I could do that. I could do that. I probably should do this in a slightly different way, but yeah, I could definitely see how it's easier than the PDF. I'm just thinking about all of these numbers because in the PDF it's different, but I'll probably just copy paste it and still paste it into the PowerPoint. So yeah, thank you. All right, guys, I'll see you next week. Good class, good job. We're moving along, so let's just finish it next week. Thank you, guys, and bye-bye.